Good evening, all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this is for Thursday, October 15th, 2020. Well, as you know, tonight we have two town hall meetings, one by ex-Vice President Biden, one by President Trump. They'll be separate. They were supposed to debate. That isn't going to happen. Mr. Scully got himself into some trouble that was supposed to be a moderator, too, so that's another issue altogether. But you have to be careful tonight, and that's because the algorithm traders are going to be hanging on every word. They're going to have key phrases. These markets will be moving on that news. The interesting thing is you woke up this morning, the markets were down hard. That offered, as it turned out, possible opportunity for those that were buying the market. For those that were selling the market, the break didn't last all day long. By late afternoon, the market started reversing course, and in many of the markets in the futures, you've taken out the highs of Thursday in early evening trade already. So those big drops were fully erased at this point. Why? Part of it has to do that the president seems very eager to get a deal done. Suddenly, the 1.8 offer, he's willing to go higher than that. So will he get up to the 2.2 offer of billions of dollars that Ms. Pelosi wants? Will he give up on the wording? How desperate is he for a deal in front of the election? The onus is on him. We'll see. And why do I think the onus is on him? Because the polls are showing Mr. Biden leading. So as long as the polls show that, okay. Now you're going to say the polls were wrong last year. Yeah, but they make changes to them. And I don't mean last year, the last election. That could be the case. We'll see if they've made modifications to them. You know, polling is as much an art as a science, so it goes every which way. So tonight's going to be important. Okay. We had a mixed picture today. You can see that behind me. And if we go to the charts, what have I been telling you I thought was going to happen in XLK? Let's take off today's action. I had circled this and said, I think that gap is likely to be filled. You went down, you filled it, and bing, you came right back into the market, all right? So if we put on the swing line, the trend is still up. You have higher lows, higher highs, trend up. Where is the key moving average? The 18-day, it's here. The 100 and 200 are way under the market, but that's a key number. That number is finally over the last break low as well. So even if the market pulls back, before it takes that out, it's got to be able to get through a key moving average. And as you can see, it's an important average often. We'll see what happens there. I'm not saying it's going there either. When you take a look at the Bollinger Bands, these black lines are part of an algorithm designed to keep the market trading within them 95% of the time. Now they can go sideways, they can start arcing up or down. The two numbers do not run parallel to each other. It's completely different. If you're curious on the formula, go to Investopedia, it'll have it. You can go to John Bollinger's website, he's probably got it on there too. But it's a resistance point. Accept it for what it is. And 95% of the time, the market will stay within this algorithm. So you got up, you stayed over it a day or two, fell back. So far, it's nothing more than a correction that we fell back on, and that's it. What about the slow stochastic? Well, you closed at 79.55. In order to lose the embedded reading, the red line has to close under 80. But I like when it closes under 80, 79 or under most of the time. Why? When you close near a day's high, the way that the math works, if this market opens steady to higher, the odds favor that number is going to jump. I've done my studies on them. If this number had closed near the day's low, then it's a different game. Then I would say, okay, maybe you had a jump, maybe you flip a coin. I think the pros held in there and they're going to wait and see what the morning news is going to offer. If the market's steady to higher, I'm looking for that market to be up a little bit. If I'm wrong on that and you close tomorrow, any number under 80, any number, I don't care if it's 79.75, out you go. That would be how I teach my charting course, and that's what I would tell people. I'm not telling you, I'm telling you what I would tell my students. In SMH, you still have the embedded reading. I think the pros are buying as long as that's in place. Higher lows, higher highs. As I mentioned to you yesterday, The market started moving away. Let me see if I can get this to go up or down. There we are. The market, for the first time, started moving away from hitting the Bollinger Band. Often that sets up that the market's going to slip back a little bit, and that's what I think the pros wait on. As long as you keep that embedded reading, that's what I think they did. I haven't changed my opinion at all on that. Still in the bull camp. XLI. Even though you've got a pattern of lower highs, lower lows, you're not looking at that. Your eye gets trained the way I train you in my charting course, and you can go to our website. It's all there. It's $199.95 with the charting software, 6 hours of videos. You learn this. You're staying in. This rules the day, nothing else. And I teach you methods of entry, and today I think was an entry day in this market. We'll see if the market can hold up. This rules it. Closed number under 80, out. Stay like that. I'm looking for the upper Bollinger Band, 82.26. What about the energy sector? Overbought market. Numbers are not over 80. Anytime you have one of the numbers, and it'll generally be the one that will lead the market, it's going to be the red one. Over 70, it's overbought. Overbought does this. I slap my hands. I don't want to be putting on new positions. If you have an existing position, then you have to start tailoring it because you're into an overbought area. Is there a trend to work with? None. You have lower highs, lower lows, which is bearish. It's fully countered because the market's staying over the 18-day average of closes. Not interested in whatever it does. QQQ, just like we had that you saw a moment ago, you just lost the embedded reading by a fraction. How do you judge the 0.28? That's the problem. So I'm going to say the same thing that I said earlier. This market, because it closed at the day's highs, if the market's up, you'll probably re-embed. The only time you can re-embed is the day after you lose it. And for my purposes, it was lost today, but it can re-embed. Had this market been near the day's low, first off, if it had been near the day's low, you probably wouldn't be anything like that. You'd probably be a lower number. But the fact that it got right up by the day's high, impressive. And I was looking at it really hard. The emerging markets, you can see lower highs, lower lows. What number did it hold on the pullback? 18-day average. You'd started your slip yesterday in these markets. Let's see if I can get this one to come back. There we are. Right here. This was getting ugly. Now you're wondering, is that going to turn up or not? Today was very important. It didn't. And here's a difference. Notice you don't have to judge, is it going to embed or not? You lost the whole thing. Goodbye. So long. Nothing I see in this chart, but is it bearish? Well, the close was 64.44. You're over the 18-day average. So what's the bias? Remember my definition. You determine bias by where the market's trading in relation to the 18-day average. The bias is up, the swing line is down, and you're correcting an overbought market now. I don't see anything there. GLD could be an interesting day tomorrow. Why am I saying that suddenly? Well, a couple of things. You have a pattern of lower highs and higher lows. The higher lows are the legacy. They were made earlier, and you made this higher high right there. So the pullback 2 days ago and then the up yesterday, not Thursday, but Wednesday, set this in place. If the market can clear 179.59, the market turns bullish again. You break the pattern of lower highs and higher lows. You already have the market in a legacy pattern, as I said, and the bias is up. Momentum, which had been correcting to the downside, and it's, again, I'm going to have to restart that computer when it does that. It's just flat on you, not doing much of anything. I'm liking the long side of that market if it can pop here to the upside. I'm not liking GDX as much because it already hit the upper Bollinger Band. That's not to say I'm not friendly this market. I certainly am. The trend is up. It just hit my upside target and it got itself overbought. TLT. When we were looking for a correction off of this, I kept saying the futures markets had a run towards the 18-day average that I was looking for them to stall at. It's the same thing that happened here. Now we have to wait to see what's going to happen. The swing line is up. The market needs to close over the 18-day average to get bullish. something else. You have an outside day down. If you take out the high of an outside day down, my rule of thumb is that if that's taken out either on Friday or Monday, the odds favor price is going to make a run at the closest moving average, the 100-day. So we'll see if that's the case. Going home, nobody's in control of this market. Last in FXE, this trend turned down. Lower highs, lower lows. I expect to see sellers stepping in, 110.42. The stop would be over yesterday's. Let's see if I got to do this, unfortunately, again this way, which I hate. I'll correct that for us in a moment. But it's got to get over 110.74 to negate the downtrend. If it continues to break, then you're looking at 109.49 to 109.22. Part of the reason this currency is weak is the COVID outbreak throughout Europe. Another part is while the UK and the European Union are still talking, today was the drop dead date. That's what I told you. Don't ever go by Europe on their drop dead dates. They never pay attention to them. Where there's a ray of hope, you keep talking. That's going on, but it was COVID. Now, to break the trend, you got to get over that number that I just said. Otherwise, you got the potential for down here. Today, as I was watching the markets, I had my clientele in the future side of things. By the way, I had a lot of recommendations last night in my SPDR ETFs, and I'm talking on Wednesday night coming into the market looking for a break today, and I got lucky in most cases. Not all, some wrong trade, out you go. Nothing wins all the time. But I was in the Russell and the future side of things, and I'm looking at the market and I'm going, do I really want to go through with full positions into the town hall stuff tonight? And I didn't. I consider major reports events where you don't have to stand in front of a train. That doesn't mean I don't want half my position or some number on. So I'm looking at this study, and I saw that we were up at a resistance point, overbought. That's all I had to see, and I said, you know, nothing wrong. Nobody goes broke taking money off the table if they've got a profit in a trade. And again, one of the things that you learn is I watch so many analysts on TV, and they don't say, in my opinion, sometimes the right things. What do I mean? If you're in a bull market, you want to buy the strongest part of that bull market. You don't want to buy the weakest part. I see people do that. But when you get a correction happen, the weakest part often corrects further than you think. The strongest part of the market is what holds up. Well, the Russell's been the strongest part of this market for the past week and a half. So whatever rotation out of the big techs happen, you just look at a chart. You'll see what I'm getting at. So I was telling the traders today, why go through these debates? I don't know what's going to be said. We know that both can screw up at any point in time. I think I'm laughing at it, but it's true. We'll see what's said. If you'd like to learn more about it and how to work with pivot points, I created a 3-part series for you. If you've never seen my written recommendations, my updates, I'd like to give you for free a chance to view the videos that my subscribers see. So you can do it. If you're thinking of subscribing because you've already seen the free offers, you're not going to get them again, go to our website under research. It's all there. And the trading course is on our website, the word education. I think you're going to learn a lot. I'm Ira Epstein. You have a good day. I'll see you all tomorrow.